Glossary of terms. Banking. The business of a bank, originally restricted to money changing and now devoted to taking money on deposit, subject to check or draft, loaning money and credit, and any other associated form of general dealing in money or credit. Capital. Accumulated possessions calculated to bring in income, accumulated assets, resources, sources of strength, or advantages utilized to aid in accomplishing an end or furthering a pursuit. Capitalization period. The time required to actually create a pool of money with which to start your own banking system. It definitely is not something that you can do overnight. You might have all the necessary capital, money, but there is still the element of time. It is like the process of getting a college degree. You may have the necessary funds on hand to pay for the degree, but you still must go through the required curriculum. Building your personal banking system through the medium of dividend-paying whole life insurance will take as little as 1.5 years. But you still need to continue the capitalization phase for as much as 10 or more years. The longer the period, the more strength of your system. Cash value. The cash value on any policy anniversary to which premiums have been paid is the then present value of future benefits provided by the policy, less the then present value factors for each year remaining in the premium payment period. The cash value at any time during a policy year is the value on the date to which premiums have been paid, adjusted to the date of surrender. Characters in the play. All the necessary functions in a given business. Stockholder, bondholder, CD holder, administrator, borrower, etc. This is in the context of my statement. On the of finance, most people don't understand what the play is about. But worse than that, they get the characters mixed up. Cogeneration. A term used in the production of electrical power, acknowledging the fact that there are many sources of the generation of power within the distribution system, many of whom are both producers and consumers of power. Classification. The act of grouping into classes that have systemic relations, usually founded on common properties. You classify things on the basis of their major characteristics. A life insurance policy with a mutual dividend-paying company is a gross misclassification of a financial instrument. It has much more in common with the concept of banking. Contingency fund. The amount that an insurance company retains as surplus after paying death claims, expenses, and dividends to policyholders. This is a significant measure of the strength of a particular company and an indication of its ability to pay dividends in the future. Dividends. The earnings of a life insurance policy based on the company's mortality, expense, and investment experience during the year. When dividends are used to buy additional paid-up insurance at no cost to the owner, the cash value of the additions becomes guaranteed at that time. This value will increase with time but cannot decrease. Entity. Something that has independent or separate existence. Finance. Noun. The system that includes the circulation of money, the granting of credit, the making of investments, and the provision of banking facilities. Verb. To provide with necessary funds in order to achieve a desired end. You finance everything you buy. You either pay interest to others, or you give up interest that you could have earned elsewhere. Gatekeeper or toll taker. Any intermediary that controls access to a pool of money. Bank. Example, GMAC, Associates Finance, GE Credit, etc. Gopher. Any administrator within a banking system. Bankers don't work at the bank. Gophers work at the bank, and they are given long titles to offset their low pay scale. Real bankers are found on the golf course, or in all probability, running some other business. Great Wall of China, the barrier limiting access to the pool of money except through the gatekeeper. Interest, the price paid for borrowing money, generally expressed as a percentage of the amount borrowed paid in 1 year. Lease, a contract by which one conveys property for a term of years or at will for a specified rent or compensation. Leasee, one taking possession of property under a lease. Leasor, one that surrenders possession of property under a lease. Mortgage, a conveyance of property upon condition that operates as a lien securing the payment of the money or performance of an obligation so that the mortgage may, under certain conditions, take possession and may foreclose according to the stipulated terms. Owner, one that has the legal or rightful title, whether the possessor or not. Philosophy, a search for the underlying causes and principles of reality, a quest for truth through logical reasoning rather than factual observation, a critical examination of the grounds for fundamental beliefs, and an analysis of the basic concepts employed in the expression of such beliefs. Process, the action of continuously going along through each of a succession of acts, events, or development stages, the action of being progressively advanced or progressively done. Stock, capital for investment or direct use in business. Principle as distinguished from interest. If you want to have a little fun, look this one up in an unabridged dictionary. Senior executive vice president, a gopher at a bank or life insurance company. Steal, to practice theft, take the property of another for the purposes we are speaking of, making policy loans without setting up and completing a repayment schedule. System, a complex unity formed of many, often diverse parts subject to a common plan or serving a common purpose. This dictionary continued the definition for 9 inches of column of very small print. Trust, a property interest held by a person or other entity for the benefit of another. The foregoing definitions were taken from Webster's Third New International Dictionary.